traders, Gary Wagner here, just about 12 noon in Honolulu, 6 o'clock in New York. It is Thursday, June 28th, 2018, and this is the Daily Report for Gold and Silver. Downside pressure continues in the precious metals complex, with gold trading lower by about $6.60, closing at $12.4950. Silver breaking below $16 at $15.96. That is an 18-cent decline. And the dollar index basically unchanged, up about 3 points at 95 even. A 98-point upside move in the Dow, closing at 24,216. And Bitcoin continues to slide, challenging 6,000 in the futures markets, below 6,000 in cash, but 6,000 down 135 on the day. Gold continues to track lower, and although it closed off of its lows today, the low today being 1247.20, it did break below 1250, currently at 1249. The interesting facet of today's trading is that the majority of lower pricing came from selling pressure rather than dollar strength. If we look at the Kitco Gold Index for spot gold, which closed off by about $3.40 at 1248.20. 50 cents of that sell-off was due to dollar strength, while the remaining $2.90 is directly attributable to traders selling gold in the market today. As you know, we are currently short. We entered our short trade at roughly $12.60, so we have approximately $11 on the trade. Our current target in terms of our exit strategy rests upon the lows achieved at the beginning of this year, the end of last year, when gold was trading at $12.38. That would be our first target, and I would imagine that if gold continues to track lower and does reach this price, this would be a very logical place for gold to have some sort of a corrective bounce back up, accounting for a portion of this last leg of the sell-off, this leg here, before returning to lower pricing. And that, of course, would be based upon the fact that the fundamentals driving gold pricing lower and the dollar higher remain intact in the marketplace, as well as market sentiment. Therefore, my recommendation is to maintain our current short position in gold, to maintain our current stop. However, I am looking to trail that stop up shortly, and right now I'm looking at, in terms of an area, at around 1261, which is the open of yesterday's candle. Trader, silver has also been directly affected by this recent sell-off in the precious metals complex, today losing over a full percent, 1.15%. And most importantly and most noteworthy, we spoke about the fact that yesterday the decline took pricing below the rough level of support that was in the market, and that support was really based upon these series of lows and closing prices here in silver. They occur at roughly $16.12. We effectively broke below that the other day, and continued selling pressure today has resulted in silver breaking below $16 for the first time this year. The last time we had silver at 16 or below was in December of 2017, and that was during a rally after hitting these lows at 1563. 1563 is also my target for silver. It is based upon these lows in the very same way that our target for gold is based upon the lows that came in between December of 2017 and January of 2018. And traders, lastly, a quick look at Bitcoin and Bitcoin futures, trading to a low today of $59.85 and then closing exactly at $6,000 per coin. That is this daily candle right here. The last time Bitcoin futures had touched this point was February, and then a brief point earlier last week. My sense is that if this price point cannot hold and become support, then we could see a tremendous erosion in Bitcoin pricing. As I said yesterday, taking it as low as $3,000 per coin. The key is whether or not Bitcoin futures and Bitcoin Cash can find support at this current price point. Traders, although it's been all about the dollar when we look at recent weakness in the precious metals complex, today was not the case. Now, the dollar was very, very slightly supportive in terms of strength and thereby taking it down a little bit, but the majority was selling pressure in the market. Today on our show, we talked about our targets in terms of our exit strategy, and I also believe that silver will move to the lows that we saw back last year. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.